Next week, next week, and the week after, lots of potential for major portfolio gains and stock gains in the stock market next week. What I mean is, we are going, as usual, we're not going to focus on everything. We're just going to focus on only a few stocks. Why? Because, it's like everything else. You cannot be a master of everything. You need to be a master of a few things to make money in the stock market. So, what we're going to be focusing on, we're going to be focusing as usual, and I will show you what I did in my Patreon channel in terms of some of the recent trades. We are talking about 1200% annualized gains here. Okay? So, it's working. The thing is, you need to know what you're buying and you need to understand the risk. So, but most important of everything, I will show you how to profit and gain from the stock market by understanding two things. Two things. The first one, you need to understand what you're buying. That's one thing. And second, you need to understand the story. By the story, I mean, what is a story that the market it's telling itself in terms of what they think is happening? It doesn't matter if it's really happening or not. It's just that you need to profit from the situation, but you need to understand the story. And by the story, basically, is what is moving the stock now, not in the future, not in the past, but right now. And what makes it very difficult in this market is the story is changing all the time. So and this is what you have me for, I will show you and explain to you what is driving the stocks. Not all 500 of them. I'm not that smart. I'm going to focus on, let's say, three, right? The first one, obviously, is Tesla. There's a lot of money to be made on Tesla. Two, QQQ, which is essentially the NASDAQ, all the tech stocks put together. And three, I'm going to focus also on a small cap stock that no one is paying attention and is getting beat up for no reason and is extremely well valued, which is GCT. Why now? Well, because in the next 2 weeks, basically on Wednesday, there's some important news coming out. And I will show you what is coming up. On Wednesday, what we are going to have in the US, which is right here, nobody cares about the mortgage, MBA, mortgage, CPI. That is what you want to focus on. Why? Because that's going to tell you whether or not we still have a problem with inflation, or at least is inflation under control. You could see this 0.3, that's what they're expecting for November. And then you have the CPI year over year, which is 2.6%. And this is basically prior to this, right? This was what, 2.6, 0.3. So we're expecting some sort of, and that's the question, is it going to go up? And then you have the core CPI, which is Wednesday. You care about the CPI. You care about the CPI because the Fed is going to make its decision on that. Why do you care about the Fed making its decision on that? Because that's going to drive the stock market. And I will tell you, based on some of the trades that I've put on recently, that the market, at least on some of the stocks, are highly, highly sensitive to the direction of spreads, regardless of how the stock is doing. Let's start with a big picture in terms of QQQ. Now, QQQ, as I've explained to you, if you take a look at my previous video, you will see that QQQ essentially is tracking is basically tracking the Nasdaq, and is basically trying all those tech stocks. Now, you don't have to invest in Nvidia and all these other stocks because, frankly, if you buy the QQQ, you just follow the trend. Okay, because I don't want to get bogged down with one stock's story, except for Tesla, and I will explain to you why. But basically, QQQ is going to go up, at least for now. That's the story for QQQ. I don't know if it's going to last forever, but the story for QQQ right now, which is QQQ, is essentially the stock symbol, is based, and it's an ETF, exchange traded fund. So it trades every day, but it follows the top 100 stocks in Nasdaq. But the point is, that it's a bunch of tech stocks, which includes Nvidia, Apple, and all that. Right? It's driven by 5 or 6 stocks. The thing is, you want to follow it because right now, over the next 2 weeks, I don't know about after that, it's highly sensitive to what's going to happen with rates. Now, on Friday, I mean last week, essentially, we had the unemployment numbers tinking up, which is good, which is good. Not so much because we have a recession and unemployment. I don't care about any of that. All I care about is what is going to make the Fed do, which will impact my stocks and impact my profits, so I could make money, right? And when I'm making money, I'm talking about 1,200%, not 5, 6% a year. That's no money. So last week, what happens is, unemployment kind of went up. So if unemployment goes up, that means that the Fed is going to lower the rates. They don't want unemployment to go out of control. They want to make sure that everybody's got a job. I mean, that's one guideline that they have. They also, to make things a little bit more complicated, they also have a guideline to manage inflation as well so that it does not get out of control. Right now, when you look at the numbers, and that's why the number on Wednesday is going to be important. The number is going to be very important on Wednesday because it's going to show you where they think rates are going to be. So basically, if inflation comes in where they're supposed to be, then we shouldn't fight inflation that hard by keeping rates where they are. I mean, they're going to lower the rates. Otherwise, you're going to have a market meltdown. Why? Well, because inflation is under control. And when I mean inflation, I'm talking about that number. I'm not talking about the real inflation. I made a video on that, right? The real inflation is much higher than you think. That some of the bread has been up 20% the past 4 years. So, but I'm talking specifically for making money to understand the story about the stock market and the item that goes around it. So, what do? We take a look at what's going to happen on Wednesday. More likely than not, inflation is going to be under control, which is going to push up a name like QQQ. Let me show you how the name trades. This is QQQ. As you could see, this was on Friday, right? So look what happened. Look, literally, the impact of inflation characteristics. Okay. What happens is the day before the announcement, I put a trade here. And of course, it depends what kind of trade you put on, but this was Thursday. We were at 523, and I know we get into the weeds here, but if you want to make money, you need to understand what's going on. But then let me show you, and don't forget to subscribe to this channel, by the way. So on Friday, this is what happened, right? I said, you know what? Let's put on a trade. Usually, because the announcement was at 8:30, the announcement about unemployment was early in the morning on Friday at 8:30. So, of course, you could say, well, let me wait until it starts moving. The only thing is, once it starts moving, as you could see, if you don't grab it here, it's too late. Okay. So you literally have to grab it before the close. You have to grab it here. Now, the thing is, you grab it here, grab it there. What I did, unfortunately, I grabbed it a little bit too early. Okay. Next time, what I have to do is I would suggest you wait. When you're going to put a trade for the next day, if you're a day trader, I would wait until the end of the day as much as possible, especially if you have an announcement the next day. So, as you could see, we're trending down. So, believe it or not, because I put an option trade and it was maturing in February, right between that level of 523 and then we got down to 521. That alone, because believe it or not, the parity between those trades, I mean, literally, I think it's about 16 times. So if you're down 1% here, you're down 16%. Now, I wasn't down 1%, but you weren't down enough that I took $1,000 loss here, right there at this point. And that's a shame because I will have to wait is a little bit longer here and we probably will be all right. Anyway, you can't, again, take a look at my video on philosophy and investing, but you can't get overly emotional about it. But basically, what happened is then the market kind of did nothing. The QQQ didn't do anything during that night. QQQ didn't do anything. And then, of course, 830 came out and the number came out that unemployment was slightly up, which is good. It's good because then it means that they're probably not going to lower rates. No, it feel like it's kind of a game, right? Are they going to go up? Are they going to go down? We don't even sure if it's a employment number is real. But the point is, see what happened there? We just took off from that point on because it would mean that the Fed was not going to lower the rates, was gonna not going to keep rates down or raise it. Was basically to keep on doing what they were going to do, which is lower the rates. And we went from the 522 level to 525 level. Right there, we clocked in almost $2,000 of gain here based on the trade I was putting. So unfortunately, because I lost 1,000, so we only made $1,000 over a 1 year period, over a 1 day period. But that's about $1,200 annualized. And then we kind of did not go anywhere. The thing is, you have to be careful because I don't put a trade like this. I think it was 3 weeks ago, and I kind of let it ride, and then you had wasted 2 weeks because because the Fed basically said, well, you know what, I may not actually be so keen on lowering rates, and that was it. I lost the trade, went to down. I said, well, I had to wait 2 weeks for it to come back, and that's too bad because I picked up some very good gain after the election, okay, through Tesla. Anyway, we're still up 100%, but over the past 3 months, but still, it could have been higher. Anyway, so here we are, right there. And then you know what I said, because I know on Wednesdays the CPI is coming up, and I also maybe want to put a trade on Tesla, so I got out. Right, you get out because, and you could see, right, literally you. This is it. You just pick up the gain based on what's driving it, and you have to know what's driving it, and what's driving it is really rates. And then we kind of, as you could see, we're not going anywhere right now. It's a very cruel game. So now you have to be very careful because there's nothing happening Monday. There's nothing happening Tuesday on QQQ. So it might do something. It might not do anything. Hopefully, nobody says anything. But then you have to wait for the CPI on Friday and Wednesday. The question is, what is the CPI going to do on Wednesday? That's a question because if you know, of course you don't, but if you know that this is going to be a positive number, meaning that it's going to, it's not going to go up, it's probably going to tinker down, then you could tell yourself that, you know what, then I think the trend is going to be for lower of the rates. Now, right now, the probability of lowering rates is getting like 70, 80%. So you're going to get paid less and less. The risk is on the downside here that the Fed says something or that the CPI number is way higher. What is it? Is it luck? Is it going to be premonition? Are you willing to take a chance? You could. You could take a chance on Tuesday or Monday if there is, if QQQ starts heading down for whatever reason for uncertainty, then maybe you pick it up on Tuesday at a lower level. Okay. And then what you want is on Wednesday when the CPI comes out, you picked up that trade, meaning that CPI comes out. I mean, if it goes lower, forget it, it'd be fantastic. Now, of course, if it doesn't, then you could take a bath. But don't forget, we won't know what he's going to do until the week after. So I would say it might be worth it to take a chance on Tuesday or Monday and Tuesday to pick up on a QQQ trade for hopefully seeing some interesting number with CPI. And if you're wrong, you still have a chance that, what I mean wrong is that the CPI actually goes up or sideways. But at least the Fed will probably lower the rates next week. Now, of course, if you get the wrong on Wednesday, and then for some reason, because of this number, the Fed does not raise the rates, then you got yourself trouble. But then again, it depends how long your trade is going to be. I mean, if you're buying the stock itself, if you're buying the options, maybe you wanna don't buy a 1 day option, maybe a 3, 6, a year, 1 year, or longer term option, so you could recover from the loss. I know, I mean, that's the risk that you're taking, but as long as you understand the risk that you are taking, that is what's important. So I would say Wednesday, that's what we're doing. We put on a trade on Tuesday so that on Wednesday we capture the CPI trend. Okay. Now, what we can also do, of course, is we have Tesla. And Tesla, what is driving Tesla? Now, don't forget, we're capturing Tesla through QQQ as well because it's part of it. But but the gain is through Tesla. That's where you could make lots of money. Why? Because it's a stock, so it's going to be much more volatile. Let me show you. This is a Mustang, people. This is a wild horse. Look at that. Look at that. Look at the who took a bath. I made a whole video on this. What happened? What happened with this? Right. This was this was the robo taxi event right here, and then we had the earnings here, and then it still don't like it. Where we really took off is here. We really did well here because and this was 340. We're approaching $400. This is a $400 stock. Okay. So 5%, 5%, 0.63%. I might want to pick up some on Monday just to ride it until Monday or Tuesday and then pick up the boat on QQQ. Now, what is driving this stock? What is driving? Look at this. Look at the trend. Look at the 50-day moving average. We are constantly above it since December. Okay. So if you've got the guts and you want to make some money, that is where you do it. That you ride it. What's driving Tesla? That's the question. What is the story with Tesla? Why is Tesla going to make us some money? What is happening with Tesla? Well, first of all, and more important, you've got the Trump trade. He even went to Paris with Trump. He's everywhere with Trump. Why is this important? It is important for you to understand what he's doing with Trump because it will impact many things. It will impact the regulations. I mean, come on, the regulations for electric cars. Yes, I mean, even though Kevin Newton's over in California wants to put in some tariffs for some the EV credits taken away from Tesla in California because it's a big Democratic state, but at the end of the day, they're probably going to remove all those credits on the other cars, on all the electric cars for Ford, and it's going to benefit Tesla, right? It's also going to be, it is taking them forever in terms of regulation in order to get approval for the robo taxi. Yeah, I mean, I guess it must have said, well, we want to make sure it's really safe. Or was it politically driven? Who knows? But now it is over because Tesla is very close. Elon Musk is very close to Trump. So he's going to tell them, and on top of that, don't forget, he's in charge of the Dodge thing, right? About all the inefficiency in the government. So he's going to say, well, we definitely don't want any inefficiency in terms of approving the robo taxi. It's huge. You have no idea. And when we say robo taxi, forget robo, forget taxi, it's AI. Tesla is an AI stock. Tesla is an automotive stock. Tesla is a lot of things, and he's well placed. Having said all this, I will say be careful because Trump tend to be volatile. Okay, maybe he's less volatile this time around, but if he's having a fight with Elon Musk, you're going to be in big trouble because the stock is approaching stratospheric heights. Now, as long as you're aware of it, okay. But be careful. So you gotta watch this one really carefully. But how you make money by taking chances and being very careful. So what's going to happen next? All week next week. Okay. I mean, if you take a look, let me show you. Let me show you Tesla. Let me show you the amount of news that comes out of this name. And there we go. Look at that. Two key inflation print looms. Hey, okay. Let me get to the actual. A tech rally pushed the major indices to new high last week as the latest economic. In the first week of December, the Dow Jones Industrial Average was a lone index in the red. So this is a tech rally that you're having right now. Data from the Bureau of Labor released Friday showed 220 new jobs were created. The unemployment rate increased by 4.2%. That is what I was telling you. So it didn't shift investor thinking that labor is cooling, but not as rapid pace, which will allow the Fed. This is basically what I've been telling you, right? But what you need to realize, okay, is if we take a look at the Tesla news, okay, look, I'm not going to click on all of them because it takes too long and you have some other things to do. And don't forget to subscribe to the channel, by the way. Now, look, Tesla stock versus Amazon stock. How Elon Musk could use this new influence to nail his rivals, which is kind of what I was telling you. Can stock pull off a third consecutive year of big gains? What? Look at this. On the December 7th alone, there's 9 stories on Tesla. On December 6th, look at all the stories on Tesla. Hold on, this is purely Tesla. Look on December 5th. Look at all the stories on Tesla. Look at that. I mean, it's huge. It's huge. And what's huge is the potential gain. Okay. Because you want that amount. You want that amount of information. So the story, obviously, the story is going to be changing quite a bit around, right? But overall, the big one is Trump, right? And now everything Trump is doing fantastic right now, and it's going to be very helpful for Tesla because obviously, if on top of that we have a rate cuts in inflation. Don't forget, Tesla is part of QQQ. If Tesla gets also a rate cut, or the government gets a rate cut, even better. That's going to push the stock up. And then any kind of news having to do with regulation being eased on Tesla, any kind of news with the Trump trades, any kind of visit together, and everyone is looking at this thing like an AI, anything, and there's plenty of news of information, right? The only thing that could derail this, I'm telling you, the only thing that could derail this is if Trump has a fight with Tesla, with Elon Musk for some reason. Then don't forget, you're approaching $400 here. This is getting expensive. In fact, with a P of 100, Tesla is extremely expensive. But I hate to tell you, you want to make money, you got to take risks. But take calculated risks, obviously. Okay, let me show you what I mean by calculated risk. Let me show you my Patreon channel very quickly. So look at this. So this was from December 7th. Sold QQQ option 3,200 annualized. Oh, wait. But a few days earlier, sold QQQ option again. Basically, I bought here, sold here, bought here, sold here. 1,500%, 1,300%. I did take a little bit of a loss on Tesla here, but up 18%. But every time I talk to my subscribers, I explain to them what I'm doing. Now, I'm going to go in greater detail with them because every morning, if you could take a look at, let's take a look, for example, at all the things that I'm doing on this channel, right? So if you take a look at the library, right? We have lots of we have what they call collections. And what do I mean by collections? Obviously, is a portfolio value that we're tracking the portfolio up to $500,000, which we should be reaching by next year. The pace that we're going. We are in stories. This is about small cap stocks. This is kind of ETF, the equivalent of QQQ, although I don't like it very much because it doesn't seem to be as liquid. Now you have GCT story, which I'm going to talk to you in a few seconds. You have the VMC story. VMC is a VMC stock. And that basically what it does is that it's really the infrastructure under Trump. Uh, let's see how that goes. But if you're going to do infrastructure, that's the stock to do it with. Obviously, you have the QQQ stories, which are building quite a bit, with six of them. We have the Tesla story, which is eight. Technical analysis, morning market commentary every morning. Boom, I give you little commentaries in terms of what I think is happening. And every single trade that I put in, I tell you about it. So we have a very, busy Patreon channel because obviously, I mean, they're paying for it. So I spend more time with them, with my customers, really, because, this is, we have to see what we're going to do. So I tell them, this is the trade I'm putting on. None that's just talking. I'm not talking. I'm actually doing because the idea is this is a $500,000 stock portfolio. And I'm going to show you could build it very quickly. Okay. So that's the story with Tesla. Tesla next week should do very well because and is doing well all the time. I mean, I would say anytime it drops, it's an opportunity to go in. Why? Because there's enough stories coming out, and they tend to be positive. There's no earnings coming out. All we are talking about is Trump and the rates, and right now these are positive. But again, be careful about the downside. And what do I mean by the downside? I mean anything having to do with one, Trump picking a fight with you, two, the national debt, three, Trump himself, what he's going to say or not say. That's very volatile. But right now, the wind is behind us and it's going to push us through at least through 2024 because earnings for fourth quarters also will be coming out soon. And that's supposed to be good. And we have no inflation and everything is just. Now, of course, whenever things are so good, you need to worry about it being too good. Anyway, so number three. Let us talk a little bit about a small, tiny stock that should be doing better and it's not. I'm not recommending option on this stock because the options, the bid and ask is pretty wide, right? So I don't. But as a stock itself, let me show you what I am talking about. So the stock hasn't done anything really. Although you will see whenever it reaches like $16, 16 to 18, 16 to 18, that, no, 16 to 28, that's $12. No, I mean, $16 plus 12, that's 28 right there. You know, that's almost 75%, just the stock alone. And if we go back, I mean, right now we're in the 25 level, but we were high as $45 at the beginning of the year. Now, what's going on here? Well, what's going on, frankly, if you go scroll down a little bit, look at the P ratio, 7. And if you look at next year P ratio, it is 5. Right? Look at the earnings. Okay. Look at the status. Now, December 6th, GigaCloud is attracting investor attention. There's a lot of a lot of positive news, but it is not being very much getting lots of love with the investment community. Why? I don't know why not. I mean, the company is a great company. Its earnings are doing great. It's business to B2B business for the internet. It's doing well. It's doing fantastic. Okay, so why not? That's a stock market for you. You need to realize that in this particular instance, the story about this stock is the market hasn't paid attention to it yet. But when you're looking at a P ratio of 5 for next year, or 7 for now, or 8, let's say on average, when on the other end, you've got Tesla at 100. So someone is willing to spend $100 per dollar of earning for Tesla and only 8 for this company. Well, I want Tesla. Yeah, but no, you need to buy when everybody else is selling, and you need to sell when everybody else is buying. That is how you make money in the stock market. So you can't buy when everybody else is buying unless you really know what you're doing. But it's something like that, something like the GCT is a great opportunity for portfolios in case you don't want to get too fancy and you just want to buy and sit and wait. I mean, that thing went from $16 to $28, 16 and that's 12. 12 is, I mean, 75% in. So when if that thing reaches $16, now is the time to buy. Why? Because there's a story on the stock. So I gave you three stocks, right? I gave you QQQ, driven literally by inflation numbers and what the Fed is going to do. I've given you Tesla, that is really the story there is driven by Elon Musk and Trump, and this is a love affair right now. And now, don't get me wrong. I mean, Tesla is doing some incredible stuff as well. It's not just a ridiculous stock. I mean, they have the robots, they have the AI story. They got a lot. I mean, the company is making money. Okay, car is fantastic. So you have something meat and potatoes here to make. The only thing is, obviously, everyone is paying attention to the stock. There's so many news. It's always feeding it, feeding it, feeding it. Now it's almost to $400 soon. This is a $400 to $500 stock. This is a $2 trillion company, as I said in the previous. And then, of course, I gave you a small stock, and GCT is one of those small cap stock. Who knows? Something may come out of it once we start paying attention. The question always is, what makes investors decide that this is an important stock? Well, this one is not. It's based on the story. It's based on the story, and is based on the amount of activity around the stocks. And there's no formula, unfortunately. You literally have to kind of like look at it this way and track it along the way. And since I've been tracking it, and I will let you know in my Patreon channel my daily thoughts on all those stocks, then you get to learn. I mean, it's like driving a bike, right? You have to learn how to ride the bike. If you learn how to ride the bike, then it's easy for you to understand how to do it. But you have to get in and hop on it. Yeah, I know it's difficult, and lots of people want to make lots of money in the stock market. But if you do not know how it works, and basically, when I say how the stock market works, and this is where it's difficult, is what is the story you're being told by the analysts? What do they think is happening? Now, I will tell you that in 1987, the stock market crashed by 20%. And the odds of that happening were 10 to the power of 50, which is almost impossible for it to happen. There shouldn't be, and yet it happened. But that's because we do not know how to measure the risk. Why? Well, because usually when you measure risk, let's see if I take a coin and I keep flipping it, you're going to see what are the odds you're going to get a tail versus the odds of getting a face is well because head because 50-50. Well, the reason you're about to tell me is because of statistics, and statistics is based on normal distribution, which frankly people like Taleb Nassim and some of the large hedge fund managers don't believe in that. Nothing is normally distributed. Sometimes you have some fat tail. Sometimes you will have a huge crash that will take you down with everyone with you, and that was unexpected, and that's a fat tail, and you should hedge yourself against that. In fact, I would recommend strongly that at some point you start buying some protection to hedge your portfolio in case, and this is always a possibility. Eventually, the love is going to go away between Trump and Elon Musk, and rates are going to stop going down, and then we are going to have the talk. We're gonna have to have that talk, right? And the talk is about the national debt. So right now we could make money, and we have to make money quickly. But then all this is gonna go away. Why? Well, first of all, if inflations keep going sideways and we don't have we don't have an issue with unemployment, he's not gonna keep bringing Rates down, 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 down. I don't know about that. So that's going to be a problem for the stock market right there. It's not going to like that. Second, at some point, Trump is going to get pissed at someone, and that's not going to be good. Third, you're going to have the tariffs. Are going to tariff stocks are going to come in, and that's inflationary by definition. And then the discussion on the national debt is going to come up, and there's no solution around it except raising taxes, delaying unemployment, cutting benefits. That is not a good story. So you don't want to do all that hard work, bringing the portfolio up to $500,000 and then lose half of it because you know what? We have a big problem like in Europe, like Italy, France, Germany. All these countries are having something. I mean, Germany is still okay, but these other countries are having issue. Maybe there could be a potential breakup of the European Union. So I'm seeing lots of clouds in the horizon. So I want to make the money now as soon as possible, and then again, don't forget you could make money as the stock market drops because you could buy put options. This is how hedge fund manager Universa, take a look at it, made 4,000% with their portfolio when they hedged their portfolio against COVID. I mean, the closer we leave to 2024 and the closer we get to 2025, start thinking about problems arising. Trump fighting, tariffs, inflation, all that, the national debt. So all these things are going to start kicking in at some point. So don't think and don't forget, if you keep going like this, valuations are going to get higher and higher and higher and higher. I would get a little bit nervous. In fact, I would start buying some long dated hedges, some put options for, like in August of next year, just in case something happens. You got to be careful. You've got to know when it's time. You have to know in the stock market. You have to know in the stock market that if you want to make money in the stock market, you need to know what the story is. Currently, it's a bets time story. It's a great story. It's a Star Wars story. The good guys winning. This is fantastic. But as soon as Trump goes into the Oval Office, then things are going to move a lot faster. Are they going to move sideways? We'll see. Are they going to move down? Just be careful. Just be careful because there's a lot of reason why but don't worry too much about it because if you understand what you're buying, if you understand Tesla, for example, you know what's moving it. If you understand GCT and you know what's moving it and QQQ, then you'll be less nervous. Okay? Because you know what drives the stock. You know what the story is. Remember, my final words. You need to know what story you are being told. And it's a story, folks. Why? Because the information on which they're basing the decision, CPI, what is CPI? It's not real. What I mean by it's not real, it doesn't, it's not the actual amount of inflation you are encountering. In fact, it's not even the real inflation based on the way it was calculated in the 80s. They changed the formulation. It's much higher. The real inflation is much higher. In fact, you could see it yourself in the way you're spending money. You could see that it is costing you more money. So when they keep saying inflation is down, but I don't care about that. I don't care about that because I am worried about what moves the stock up, down, or sideways. That is, you need to realize. You need to realize that it's a numbers game and it's a story game. I know it's not fair, and that's what makes it difficult, and that's what makes it almost impossible to predict the stock market because all these people get nervous at the same time or they get enthusiastic. I mean, come on. Tesla was about $200 stock after the story with the robo taxi in October. Now it's almost $400. But what happened? They're making the same thing. They have the same prospect. Everything is the same, except now you've got the Trump love all over him.